insurance. There's so many questions that people have about life insurance that they're just too embarrassed to ask. And that's what we're going to address today. So I've invited an ex-colleague of mine to the podcast today. He's a senior planner in financial planning. He's called James Marks. So welcome to the podcast today, James.
Hello, and thank you.
So today we're just going to have a discussion about life insurance and, maybe answer questions that, a lot of you possibly, wonder about but you don't know the answer to. Because generally life insurance is a subject that people don't know a lot about. For a lot of people it is a big black hole. Because like I said to you in the introduction, no one likes to think about dying. However, if you're married, and you've got kids, it's obviously worth considering and thinking about, let's start again. Is that going okay?
It was going okay, yeah.
That's why I started laughing. It's because I'm not prepared for it. I should have prepared more.
Try and bring me in, I can waffle on for a few minutes.
On today's podcast, we're going to be talking about a subject that not a lot of people like to talk about. And quite frankly, the person who I'm going to be talking to today, if you were to meet him at not to meet him personally at a networking event, but what he actually does for a living, a lot of people would actually run a while. However,
I don't take it personally.
However, putting insurance in place in the event of your death, especially if you've got family and you've got children, is a really serious concern. And I've been asking James to come onto the podcast for quite some time now, and I planned to speak to him last month. Obviously, the month of October is Breast Cancer Awareness Month, and I thought it would have been a really good time for us to discuss it then. But we were both really quite busy with other projects, and we've only really just got the opportunity to sit down now. But like I say, life insurance is a subject that not a lot of people know a lot about. And there's so many questions that people are very embarrassed to ask. So I'm hoping that we're not going to bore you to tears today, because it's not the most exciting of subjects. However, the questions that I do think we're going to go over for you today are going to be questions that would be very useful to you if you were to be sat in front of a life insurance expert, and that would help you plan for your family's future. So without further ado, let's welcome James Marks to the podcast today. James Marks is a senior associate. He's been a financial advisor for many, many years. He's an ex-colleague of mine from a company that I worked at for 5 years. And he's probably one of the few people that I would trust in this industry, hence why I asked him to come along to the podcast today. So welcome to the podcast, James.
Thank you for that. Let's see if we can tackle some of these interesting questions about life insurance today.
Okay. What's the most common question you get asked, James?
The most common question is most probably, am I not covered through work? That tends to be the biggest misconception. Well, it's not actually a misconception, to be fair. A lot of people are covered through work, and some work policies are very good. The only issue with them generally is that when you leave your place of work, you no longer have the life insurance, it leaves with you. And what a lot of people don't consider is that the percentage of people that actually die during work is actually relatively low. It's probably a good thing. But it is relatively low. So what normally happens is people get ill, then unfortunately the work has to let them go, and because they've let them go, they lose the life insurance, and then if they subsequently die, they then don't have the protection in place for their family.
So quite often having work life insurance isn't actually as good as it sounds.
It's not. I mean, it's always, I would look at it as a bonus almost. If like most, not all, but like most expats, you move around companies and you move around countries, If you can get something in place that follows you wherever you go, and that's adequate to look after your family, God forbid if something happens, then you're fully covered no matter what. If your company offers something, and that might change from company to company, then okay, you can't have too much life insurance in my opinion, but you can always have not enough, and that generally is the case, unfortunately, with most people.
Yeah, thank you for that, and I do think that's a really important point to discuss, and I know when I was sitting with a lot of individuals, that was the first thing quite a lot of them would say. In the industry, you know, in sales you would call it an objection.
Yes.
I've already got life insurance through my employer, but the reality is, and it isn't just a sales tactic when financial advisors are sat down in front of you and they say, well, yeah, that's all good and well, but you know, it's good to have your own in place as well. It's not actually, you know, for the reasons you've just stated. You know, a lot of insurance companies and a lot of employers, you know, if payouts are made, that comes at a cost to the company, and that also comes at a cost to the other employees because their premiums go up. So quite often, not saying that this is going to be the case with a lot of companies, but they're going to avoid paying insurance out if they can.
Yeah, I mean, a lot of the policies, and you know, some companies do have very, very strong policies, I will say, but a lot of companies just tick a box. Now, if I'm sat with a client, they're adamant that they've got, and this happens quite a lot, I've definitely got enough through work, and then it's always worth, and it's worth doing this regardless anyway, to actually work through the figures. You know, look at the two main reasons for life insurance, in my opinion, is long-term debt and dependence. So if you work through the individual figures that are relevant to your situation, and then you work out exactly how much you would need in the event of death, and then look at what have I actually got through work, because quite often it's 10 times your basic. Now, as we know here in this region, a lot of the time your basic is a lot less than your take home, but people get that confused. So if you're earning, let's just make up some figures, if you're earning 40,000 take home, but your basic's actually only 20 when you take a housing allowance and school fees and everything else, that's a massive difference. That's like half the amount. And if you've calculated your life insurance on the higher amount, then your family's going to be left short. Again, some clients will look at it and they'll go, well, I will include my work life insurance as part of my overall life insurance. Again, as long as they have something that's consistent, I wouldn't say it's necessarily a bad thing, but they just need to make sure that they reassess that every time they change jobs.
I guess there's lots of ways of approaching it and calculating it. I mean, I used to say as a general rule, and this is really quite general, that you know, if you times your annual income, you said by 10, I used to say that by 20. I mean, that was a good, and that would be a good level of life insurance. You know, obviously, I would ask them to times it by the number of years they've got left to retire. Yeah. So that means that that individual would have enough income, would have the same level of income, their family would, you know, have the same level of income that they've currently got in the event that anything happened to any of them. However, I would always point out that that's actually a really, really good level of cover, and not all people need that. Any insurance is better than no insurance.
Sorry to interrupt. I totally agree. Look, I think it's very much an individual thing. What you don't want to have is you don't want to have too much insurance and pay too much money, because hopefully, if you're taking a term assurance to say a retirement age as an example, you need that money up to retirement if you were to die before, to make sure that your family's looked after or that your long-term debt's paid off. So if you have too much, then you're paying too high a premium. But everyone is different. You know, if you've got young children, there's a lot of moving parts in this. Do you want to make sure there's enough money there to cover their university fees? Do you have a house back home for your wife and children, in this example, to move back into? Is that a consideration? Maybe don't look at what you earn, but look at what they would need. Because if they're going back home and living costs are half the price, why would you base it on here? Because then you're going to be paying twice the amount. Most, not all, everyone's different, but most people will move home when something like this happens. So if you base it on what's affordable here, but what you would physically need in different scenarios. And this is another reason why I think it's important to have both the couples involved in the conversation, because they will have different opinions. And obviously you want to get the amount right without it being too much, but at the same time making sure it's adequate.
Yeah, definitely. It's definitely worth sitting down, like I say, with both couples. I remember in the past when I used to sit down with the men, and then I would sit down with the man and the wife together, their face, when you're going over the financials. And I don't know if it's an ego thing with men, but quite often they would just say that they were earning a hell of a lot more than they were.
Yeah.
Whereas women just tend to be so much more kind of honest and realistic about it.
Absolutely, and the other thing is that they both have different objections and different ideas of what they want. So if you get the agreement between two of them, then you make sure it's fully bulletproof.
Okay. Out of the people that you sit down with, generally, what would you say the average age was?
I'd probably say mid to late 30s.
Because age is a big factor when it comes to life insurance, obviously, because the younger you are, the less statistically you're deemed to be at risk, so the insurance is going to be a lot cheaper. And if you're taking term insurance, then that premium is going to stick with you until the end of the term, which is if you take that to your retirement, you're stuck with that. Well, you're not stuck, it's probably not the correct terminology to use, because you benefit from that low premium up until your retirement. But the reality is, a lot of people tend to take insurance out in their later years. Would you say late 30s, early 40s?
I would actually say generally later. I think, like a lot of things in life, you tend to do things either through greed or fear. So on the life insurance side of things, most clients actually come to me, which is quite rare, and say, I want life insurance. It's normally because someone they know has just died, whether that be parents or a friend or a colleague. It's a reaction to something. It's very rare that someone comes to me and says, look, I'm thinking about my family's future, their protection, I want life insurance. It's normally a reaction to something else that's happened. I would say most people that I meet outside of work, let's say, when it's not a meeting, and inside work when I meet them, most clients under 40 that I meet tend only to have their work cover, and it's relatively rare for them to have their own individual cover. Some do, I'd probably say maybe 20-25% do, but the vast majority do not, and in most cases haven't thought about it or haven't wanted to think about it.
Yeah, you're totally right with what you're saying about it being a reaction. And I don't know whether or not we'd be able to change people's opinions of this podcast, but it's definitely worth planning well in advance for these scenarios. And I'm guilty of being kind of reactive about a lot of events in life, and I think it's human nature that you react to situations like that. I think we all think that we're never ever going to die.
Yeah, I agree. I think the other reason that a lot of people take life insurance is want to have children as well, because all of a sudden they're not just having to look after themselves. They've now got a small little cute human that is totally their responsibility, and if something happens to them, it's obviously going to have a massive knock-on effect on their life, obviously emotionally but financially as well. So that is sometimes a reason why people might come forward and say they think they need it. But I think to sit down at any age, and like you said earlier, the younger you do it, the cheaper it will be, but things will obviously change through life. But as I say, if you take it younger, we can always amend things as life goes on. A term insurance plan is relatively stagnant in terms of being able to make changes to it, but there are other plans that are a little bit more flexible. So if you are on, let's say, the younger side and maybe pre-having family, and then maybe it's worth taking a plan that's a little bit more flexible so as we can change it in the future. But again, it's a case of sitting down and looking at all of the aspects. I mean, today we're mainly focusing on life insurance, but I do believe something that's very close to that is critical illness insurance as well. So I think looking at all aspects.
No, we need to talk about critical as well.
Okay,
I mean, to me, I put that all under the same umbrella, life and critical.
Yeah, I mean, from my point, I think they're both important, but I actually believe that critical illness cover is probably relevant to pretty much everyone, because at some point you're either going to die, you're going to get a critical illness, but normally, unless you're unlucky in an accident or something, generally you get critical illness first. So then you might have a year, year and a half, 2 years of not being able to work and being ill before you die. So again, it's planning for that side of things. Statistically, a lot of people get ill relatively young, surprisingly. I mean, I think in the region, these figures are not exact. I think things like strokes in this region, the average age is like mid-40s, which is really very young. I mean, I always remember when I was younger thinking of something like a stroke for old people, 65 plus. But actually, because the environment we live in here, and we all work hard, and obviously it's related to stress and everything else. So it's again sitting down and looking at, if I was to get a critical illness, how would that affect me, and how would it affect my family? And again, there's a different way to look at this. I would normally look at it and say, look, let's look at, and this is age dependent, but let's look at someone that's in their 40s. I would look at what they're earning, and then look at what they're spending. And I would actually base that cover more on what they're spending rather than what they're earning. And I would normally say to them the ideal amount of cover is 36 months or 3 years worth of critical illness cover. This is obviously separate to the life cover. Reason for that, in my opinion, is that 12 to 18 months is normally the time it takes to either hopefully fully recover, which is what you want, or generally after that time, then the person tends to pass away. So with that in mind, it's 12 to 18 months of not having any financial stress. If you've not got financial stress, in my opinion, you're much more likely to get better, because if your stress levels are lower, then you're more likely to get better. Then you've got another 12 to 18 months to maybe restudy because your old job was stressful, maybe relocate. But again, you can do all these things, or even looking for another job. If you've got money in the bank, you're not going to be stressed. You're not going to go to that new interview when you're recovered needing the money. You're going to go there relaxed. And if you're going there relaxed, then that obviously will make that transition easier for you as well.
Yeah, thank you. I totally agree with you that stress causes a lot of illnesses, and I do believe that a lot of illnesses are psychosomatic, in that they're created in the mind.
Yeah.
So if you are diagnosed with something, and like I say, you've got all these worries and this anxiety about how you're going to pay the bills, how you're going to pay for your child's schooling, how you're going to put food on the table, it's not the best environment, for trying to get better, because you need to be as stress-free as possible.
Absolutely, and again, a lot of people I speak to, when again it's age dependent. I mean, I'm 41, I'm a smoker, although I'm constantly giving up, but I am a smoker, so for my insurance I probably pay about 40% more because I'm a smoker. That actually makes sense because I'm more at risk. So the fact that I have insurance as a smoker, I'm probably more likely to get lung cancer or this type of thing. But I pay more for that. If someone's a non-smoker, obviously they pay less. So quite often I'll have meetings with people and I ask them the question, do you smoke? They say no. So I ask them the question again, do you smoke? They say sometimes. You ask them the question again, they go, well, only shisha at the weekend, that doesn't count. And again, this brings up the point of needing to kind of be honest. Some people say, well, what if I have to have a medical examination? Well, for me, having a medical examination is part of it. If God forbid they find something, a medical examination is better to know, but generally they're not going to find anything, but it will give you that peace of mind at that point.
Most people in this region would need to have an examination. I think if the premium is above 250,000 or 350k with some companies, am I correct?
Yeah,
a medical examination.
It's age dependent and previous health history dependent. and also cover dependent as well. So different companies have different kind of limits, if you like, for when you need a medical, based on age, based on limit, based on whether it's critical illness or life insurance. So, but it will always say, or it should always say on the quotation that you get, whether you will need a medical. Now, if you disclose something in the health and lifestyle questionnaire, which you have to fill out as part of the application, then that might change. But if it's assuming on the quotation that you're fully healthy, so it will always tell you up front if you're going to need it, if you're not going to need it. I wouldn't see it as a worry, although a lot of people do go, well, I don't really want a medical. Firstly, it's a free medical. You're not having to pay for it. The insurance company is paying for it because it's in their interest to understand what your health situation is. And in my mind, it's in your interest to understand what your health situation is before it goes in place.
I probably shouldn't really be saying this because I certainly don't want to be encouraging people to lie when they, do their application forms. But I'll never forget this when my brother once said to me, my brother used to live in Abu Dhabi. He'd never smoked in his life, but he was a drinker. So he literally, he hated smoking, but he loved to drink, which basically meant that he'd been around smokers pretty much his whole life, because whenever he wasn't working, he lived in a bar,
Yeah.
And when he went for his medical, the doctor said to him, "How long have you been smoking, Mr. Turner?"
Wow, but
Yeah. And he was like, "I've never smoked a day in my life." He was actually quite offended because he hates smoking. And that always used to get me thinking, passive smoking within itself can be very dangerous. And how can these companies actually tell that maybe you can go into this in more detail than me. How can they actually tell that
generally
you are a smoker?
The rule of thumb on any insurance application, just to cover this off, you have to be fully transparent and fully truthful, because at the end of the day, there's no point in not being, because you're putting this in place to protect yourself or your family or both. So if you've put something on there that isn't 100% correct, then that's exactly, and you would be found out, and then the insurance company won't pay out. So then there's no point in paying the premiums anyway.
It's wasted money.
Absolutely wasted money. And when it comes to smoking or non-smoking, and I've had similar things with clients who've given up 6 months, 9 months before, they do a coatine test, I think is the right terminology for it, and that determines whether you're a smoker or a non-smoker. So if you become a non-smoker, i.e. you have no nicotine intake for more than 12 months, you can go for one of these tests and change from a smoker to a non-smoker, albeit on a term insurance plan you would have to restart the plan from that point. But again, it's being honest. Now, in your brother's situation, he was being honest, but because he has had passive smoking, it's obviously in his system, so they would have to change that for him being a smoker. Now again, maybe in 12 months' time, if he maybe sits in the non